Welcome back, ladies and gentlemen, for another YouTube video. All in crypto here, and today we are going to be delivering another daily cryptocurrency market update. What an amazing 24 hours it has been, and we have lots of really interesting things to share with you in this video. We are going to be playing a clip from Ernest & Young's, one of the Ernest & Young analyzers, talking about over $200 trillion that is waiting on the sidelines, that essentially cannot gain access to the crypto space without the regulatory clarity in place. Now, we are seeing progress in regards to a Bitcoin spot ETF, but the future that we are moving towards is one where you will have altcoin ETFs, and that is still all to come, and you guys get to be the beneficiaries of it. This is exactly why this channel was created, to help you guys benefit from what is nothing short of a technological revolution that is going to change the entire world. Everything is going to be ran on distributed ledger technologies, guys. We are in the process of writing a book at the moment where we actually cover the emerging of technologies and look at the correlations with the cryptocurrency market. And then we're going to be naming 10 cryptocurrencies that you should be watching in 2024. So do stay tuned for that. We haven't officially announced that. I guess we kind of just did. But on to the update that we've got for you today. We have a lot to look at. What a marvelous chart. And we are teaching what we believe is the best guide for investors technically, in regards to looking at, stage analysis and, stages that markets go through. And we have suspected that we were now in a breakout for Bitcoin, and that altcoins, as they historically have done when you transition from a bear into a bull, Bitcoin leads that charge, are now looking to play catch up. We have certain altcoins that are up over 20% in the last 24 hours, and you guys can benefit from that. Also, if you want to find out where I'm buying, please do consider becoming a patron. We give a lot of them out on the channel, because we love you guys, like Chainlink and others. So we've got a lot to get through. We'll be talking about Bitcoin, where it's at. Your downside scenario is now completely invalidated. And we did say you are going to, when you take out a high, typically you do it with momentum, you're going to slice through this volume all the way into 40-something K. We've got these head and shoulders targets. We've got a potential bull flag, all taking us to sort of 41, 43K range. We are going to be talking about our risk on period. This is the dollar, and we've been speculating really since the start of the month that the dollar may be at a turning point. It's invalidated market structure of the uptrend that it was in. It's fallen out of this channel. And we're going to be looking at the kind of risk on period that we've suggested may be at hand, although the stock market being a little bit tricky with that. Gold and crypto doing quite well. And then, of course, the bond market's still down. And housing, which is a very interest rate sensitive market. And the longer these rates go on for, the worse the situation gets, unfortunately. And we did actually have Bill Ackman, who is a very well-respected marketeer, coming out and saying that he has looked to cover his bonds shorts, which means that he's essentially worried that they're going to go up, which is typically correlated with negative news as people run to the bond market for safety. Very interesting. We know that the environment that we are in, we think, is going to allow the markets to do well, which is 180 degrees contrary to what most people have been led to believe from the media and other channels and sort of people that cover this stuff, because people simply can't fathom the fact that a market can do well under high interest rates. Well, actually, historically, that's been the case pretty much every single time. And eventually, the kind of strong current that is interest rates does, the markets do give into it, but it comes a lot later, and they typically go up and actually put in new all-time highs, certainly in the raising of rates and then for a period of time after. And of course, the market potentially is doing quite well today as a result of Bitcoin's iShares, or BlackRock's iShares, which they're going to call IBTC, which is their ETF, actually looking to be listed or put on the Nasdaq. So an ETF a spot ETF for Bitcoin is here. It's coming. It was always going to be an inevitability. BlackRock own everything, and we are on the cusp of it. And this is why you're seeing Bitcoin's price do largely what it is doing, and it's bringing the altcoins with it. We have done a whole dive, and I've not seen anybody else cover this chart on other and what we think could happen here. We are going to see overperformance for the altcoins. It's just going to be a matter of time. We know it's been hard for us, continuing to be bullish. Certainly here, but we were bullish here, and here, bearish throughout all this. We went against a lot of people that we really respect on this call, and it's ultimately paid off. And that's why you have to make hard calls in the market. And they're a lot easier when you have sound reasoning and methodology behind them, which of course we do have, and we try and share that with you on a daily basis. So we've got a lot to get into, and then we're going to be covering the Earnest and Young stuff. We've covered quite a bit already. The Bitcoin chart looks great, and you have now, in my opinion, invalidated what could have been a head and shoulders and further downside continuation. This is now a stage 2 breakout. You've had 2 second chances in a very textbook manner, and ultimately we are looking to see that continuation. This is now going to be an uptrend. Likelihood is you're going to get to this sort of 40k range, run into a bit of resistance. We can see new all-time highs, certainly in 2024. We think the bull has already started, and we've been calling that since down here. Altcoins have done typically what they always do, but they will now play catch up, and we're looking at lots of things like Bitcoin dominance and other things to suggest that. Before I move on to Bill Ackman, we have been speaking about this risk on period. So when the dollar goes up, risk goes down, and when the dollar goes down, risk goes up. And you can see that this really signified the bull market for, or the new market out of the downtrend for stocks back in November, October, when the dollar started to come down. And you can see how correlated risk is. And essentially, whilst the dollar has been doing what it's doing, risk has come down broadly, with the bond market more so, more aggressively. However, we have looked at a turning for the dollar and a potential risk on period that we seem to be getting. And this is a very good sign. I do think you've now broken out of this channel, and you could potentially be starting a further down leg. But we will see. We also looked at a lot of the currencies that the Dixie is against, like the Japanese yen, which is a perfect level for resistance to come in, the pound, and a number of other things. So we may have this risk on period ahead of us. It's going to be very telling. I don't think they're going to do a rate hike this month, but they may do one in the next. Stocks, probably most importantly, aren't doing too well. However, I do think they will pick their feet up eventually. If we get this off of the daily time frame, you can see where they're kind of finding some strength. You can see 1, 2, 3 impulses in here, almost in a slightly falling wedge fashion for the Nasdaq. I'm not so sure I would bet against this, actually. You could see a break to the upside. We have higher targets for the S&P. We have higher targets for quite a few things, gold, etc., and certainly Bitcoin, and it's all coming to fruition. It's great when a plan comes together. You had Bill Ackman talking about covering his bond shorts, which actually there's a bit of correlation here between what we've been looking at for a risk on period and bonds. So you may see a flowing out of the dollar into bonds. The only thing is, I'm not a bond buyer. I think bonds are, you've had your Raoul's saying buy bonds, wear diamonds, all since this capitulation has gone on and been continuously wrong. I know people do want to buy bonds, and potentially that may come with a bit of a slowing down of the dollar that could see the markets doing quite well. Obviously, yesterday you had reports BlackRock Spot Bitcoin ETF has been listed on the Depository Trust and Clearing Corporation, which handles the Nasdaq trades. This is a very good sign. They were always going to have a Spot Bitcoin ETF approved. They own the US, basically, BlackRock. And it's good for the market. It's good and bad. It's good and bad. There are negatives, I think, to it. Perhaps not from a price point of view, but perhaps from a philosophical point of view in regards to what Bitcoin's really doing. A word of warning: people often buy the rumor and sell the news, so be careful. You want to be positioned before the move, not after it. And hopefully, we've helped people to do that. We also are seeing across a number of funds, public funds saw $43 million in terms of inflows into Bitcoin today. That's 10% of the year-to-date total in one. So there's volume and conviction coming through with this. What I want to do now, guys, is, and we are going to bring out altcoin videos and stuff like that, is actually look at a clip from Earnest and Young, one of the analyzers, talking about this colossal amount of money that's sort of sat on the sidelines and waiting to come in. And it's inevitable, and it's not just going to flow to Bitcoin. You are going to have altcoin ETFs eventually. Some of these altcoins are literally changing the world. And again, we believe so much that not only do we talk about it daily, not only do we have a website, not only do we have a Twitter, not only do we have a Patreon, we're actually even writing a book about it. So without further ado, guys, let's get into this clip of Earnest and Young, and then I'm going to love and leave you to your triumphant Tuesdays.
There's so much, that was like just a little taste. There's so much pent up demand, right? And if you think about like the $200 trillion of assets in this world that are behind what I'll call like the institutional gateway. So when you talk to like family offices, which have huge flexibility, 100% are in some way in cryptocurrency. But any of these other institutional funds, they can't touch this stuff unless it's an ETF or some other kind of regulatory blessed activity. So yeah, I think that was just a taste of what is coming.
But in terms of that flow, because, and I'm a supporter, so I completely agree with what you're saying, but is there also that risk that you get, you know, the ARK kind of fund flow, that you get this initial huge surge, all of this retail money coming in, and then perhaps events might cause people to liquidate, and then it doesn't necessarily, like, people shouldn't be expecting high and to the right is the point that I'm making.
I think that's a fair statement. The one thing about cryptocurrency, which is different than actual gold, right? When the price of gold goes up, you can actually mine more gold. When the price of like Bitcoin goes up, you can't really mine more Bitcoin. The issuance rate is set, and at some point it will stop. And so I think we might discover that pricing in Bitcoin is more inelastic than other types of sort of inflation or restricted supply hedge type of activities. So it could be, again, it could return to its status as a remarkably volatile asset. And especially if people are buying it as a hedge against like political uncertainty. We seem to have loads of geopolitical uncertainty going around at the moment.
Oh, absolutely. And there's going to be a fair amount of political uncertainty next year with all the elections lined up around the world. But where does that leave the story about cryptocurrency adoption, right? Digital currency adoption that we were talking about. We were talking about at the peak of the pandemic.
So that one is a harder one to peg, because if you look at the people who are buying Bitcoin, they are buying it as an asset. They're not buying it as like a payment tool. And if you look at people who are buying Ethereum, they are buying it as a computing platform for business transactions and DeFi services, and really as a mechanism for transacting with stable coins. I think for payments, one thing that's been proven very well is we're going to stick with fiat currencies, stable coins, and of course now we're inching towards this era potentially of central bank digital currencies.
Right.
So there we have it, guys. A well-respected company, one of the largest, talking about Bitcoin, talking about the pent-up demand. You know, this was always the plan, and they want to shake retail out. And the good news is you are going to have second chances. You are going to. It's not too late, guys. If you've missed this train, if you were still very bearish on the markets, because of your own reasoning, that's fine. It's not too late. You've got plenty of time, actually. And actually, we've had to ride a lot of volatility out with altcoins to reap the rewards, but it's often not a very nice and pleasant journey. However, you know, it's not too late at all. Your altcoins are still, I think, in my own opinion, at good prices. And that's all we've really got for you guys. Hopefully these videos are helpful, informative, and useful. If they are, a like and a comment is always appreciated. We really do believe in what we're doing here on the channel, certainly when we look at the other channels that are out there. And actually, I've spoken to some of these individuals. I'm going to leave it at that. That's all I've got for you in this video, guys. If you've enjoyed the content, a like is appreciated, so it's a comment. Big things coming. Again, on the topic of, it's still early. Most people, crypto's not even on their radar. You know, they probably got burnt on Dogecoin and stuff like that last market. They'll come back. You want to be positioned before that happens. On that note, I'll see you in the next one. Thanks for watching. See you in the next.